Hey, this is Stocks Pilgrim, and today we are going to continue to talk about the absurdity of technical analysis and use a very specific example brought on by a respectable trader on Twitter, D-Book Trading, who made a statement that I want to draw some attention to. The statement itself was that with consolidation, you want a structure that looks a particular way, and there was an image that showed an increase in volume, green candles, and then the structure needed to be lower volume in the pullback prior to a breakout if you're trading breakouts. I partially agree with the statement, but for different reasons and using different tools, as you know. That said, let's dive into this. Foremost, consolidation in trading is defined as a stock or security that is neither continuing nor reversing a larger price trend. Consolidated stocks typically trade within limited price ranges and offer relatively few trading opportunities until another pattern emerges. The absurdity of this statement is very simple. Where's consolidation on this chart? You might say, well, if we're on a 5-minute chart, consolidation very clearly is here. Prior to a breakout. But then I would challenge you and say, well, isn't the definition of consolidation a stock that is not reversing a larger price trend, and isn't the larger price trend here? So when price consolidates, are you meaning to tell me that this is not part of that consolidation, as it is reversing the larger price trend? By definition, that is what is said. Secondly, if we were to go by that definition, is this not a trend that has a reverse or a reversal of the same trend? You see how technical analysis is a way to cherry pick and go nowhere. It is an opportunity or a tool used to go in circles constantly. Let me give you another example. Regardless of what happened today, here's the 1-minute time frame. Fantastic. There is a lot of opportunity here. There are candles all over the place. Tons of reversals of trend and consolidation and price stuck within a range. Let's discuss why this means nothing in trading. All this is great. The moment I go to a grown man time frame, like the 65-minute chart, question. What is this? Seems to me that this is consolidation. Seems to me that if I really wanted to go back a little bit further, I could say that this is just reversing the earlier trend from here to here. So it sounds to me like this is still consolidation. And if we really wanted to go to a larger time frame to see if we're correct, it seems like we've been consolidating for some time. As a matter of fact, let's go to the daily chart. Oh, what's that? On the daily chart, technically, price is still consolidating within a tight range because there is a larger trend that precedes it. So if not a daily chart, why not a 3-day, 4-day, 5-day chart? Why not a weekly, monthly, yearly chart? The point is, definitions like that give you no clarity, and the reason you don't feel like you understand anything is because these definitions are made to cherry pick so that you, once again, can go in circles and reach nowhere. No destination whatsoever. It is for you to sit around conversationally and talk about trading. that is what it is for. Yes, there are times where price does not make a significant move, and then it makes a larger move. But by that definition, I could break these candles down to a 1 minute time frame and say the same thing, or I could break it down to a 30-second time frame or a 10-second time frame, and I could get the same level of detail and the same level of conjecture, and I can make up the same amount of information if I wanted to fit whatever my narrative is at the time. Let's go into an example. The statement that there needs to be a certain kind of structure in consolidation in order for price to break out. I'm going to both prove and disprove that at the same time. Here's an example. Number one. And mind you, we just went to this 1 minute chart. I did not look at this ahead of time. So I'm going to find this on the spot. Price is consolidating where on this chart? You could say it's here. There was a larger trend and then price consolidated. That's fantastic. That's great. Do we consider this part of the consolidation or this? I guess it doesn't matter. But for posterity, let's say, and for consistency, let's say that below the moving average is considered lower volume and above the moving average to consider higher volume, because the volume is 20 simple moving average. It's the last 20 candles that determine that mathematically, which I know most people couldn't even utilize if they had the opportunity to. So that also kind of doesn't make any sense to even compare to. But regardless, it gives us a visual marker. So here we go. Price is consolidating here prior to a larger breakout. Let's make that the parameter, right? That's what we're going on. Lower, higher. Let's call the lower prices consolidation for the fact that price attempted to make a new high and wasn't able to. We're going to base that on the fact that there is a shooter candle here and a prior area of resistance here, and you could even say here. So 1, 2, 3, 4, 5, or maybe just, if we're counting all the candles, 1, 2, 3, 4, 5, 6, 7, 8. I mean, how many candles, right? Once again, conjecture and absolute BS, but we're going to play along for now. Let's say one area, one group here, 1, another group here, 2, another group here, 3, and then a breakout. Okay, so based on the rule that was stated earlier, there needs to be a higher volume breakout and then a lower volume consolidation, or higher volume as a structure of support, and I'm being generous giving those terms to the definition or to that statement that was made, and then say a larger amount of volume on the actual breakout itself. Okay, let's see if that makes any sense. Number one, here you have the start. That's a lot of, matter of fact, this is lesser volume, so we'll give them that. But what precedes it? Well, number one, the example that was used, there was no numerical value assigned to it, so it would have been a visual test. But let's assign some actual values to it. So 1 and 2, this is 149,000, or this is 99,000, this is 149,000. We're going to be generous and say 100,000 and 150,000 on volume with these two candles. The next 4 candles, 186,000. 95,000, 88,000, 146,000. All of these precede what becomes the breakout. While this is higher volume, it is what some would say selling pressure or selling. Based on the example that was given at the beginning of this would invalidate the claim. In addition to that, let's go ahead and add some volume here. 1, 2, 3, 4, 5, 6 candles, 7. Okay, in these 7 candles, not a single one of them is more than what was here. But if these candles are greater than what's here, then the initial claim was invalidated, because this is the breakout. This is a breakout. This is a tradable breakout that begins with lower volume and consolidates higher with higher volume. In fact, if we wanted to see price trade sideways here, yeah, this is lower volume. Lower. But where does the lower and higher stop? Once again, if this is the breakout, then let's use this as the example. This is consolidation. There are several instances where there is lower volume below the moving average in the beginning of the consolidation, and in the second half of this supposed consolidation phase, there's clearly higher volume. Just look at the moving average blue line for reference if you need to, right? Then, even after there's some sort of pullback here, right, there is higher volume that increases, and then as price flattens a little bit more, there is lesser volume with greater volume following, and then the breakout. Once again, this would invalidate the claim that was made at the beginning, because this is a breakout relative to where price is here. In fact, this is a breakout relative to where price is here and here. Once again, technical analysis for the most part is BS. Not only is it a series of puzzles and word games for you to sound like you know what you're talking about and to sit around the table and chat about the money you're losing, or asterisk next to that, not losing, or the money you're paper trading and posting as your real gains. But the reality is none of this makes any sense to sit around and analyze. It's just noise. And I can make any of this true if I wanted it to be. Mind you, I have over a 90% win rate on the year and last year, so I must be doing something right. But I can tell you one thing I don't do is sit around and post charts or reply to other people's charts and tell them what they should or shouldn't be doing unless I have some way to factually back it up. And I'm showing you this instead of just a chart. I'm giving you a video this time around, because let me tell you something right now. If you think that this is any less of a breakout than this is, you are sadly mistaken. And if you tell me that you can sit here and do an eye test when it comes to volume, as opposed to going and adding the numerical values, you are sadly mistaken. And if you think you can sit there and tell me what these red candles mean as opposed to the green candles, I can almost guarantee you, for the most part, unless you're in my group, that you don't know what you're talking about. And I can show you, and we can compare win rates, or we can compare trade rates, or we can compare trades at the same time, or we can go and see success rates on any stock, any time of day, any time, any area of the chart, any conditions, and I can guarantee you that you will not be able to do what it is that I do without using the information that I use. And I can promise you right now that it's none of this. None of this is made as an ego trip or to say, hey, I'm right and someone else is wrong. What I'm showing you guys is that for the final time, there is a serious inconsistency within this, and it's made for you to sit back in awe and think, that's amazing. I can do that too one day if I try hard enough. And then you spend your hard-earned time, money, joining discords, whatever, buying books, spending time reading that, taking time away from your families, whatever, instead of studying and learning what you should be learning to get better at this. Instead, you are learning a bunch of bullshit, a bunch of conjecture, and a bunch of people pontificating and grandstanding and holding court and showing that they're so great with their paper trading or their smaller trades. And I'm not referring to any one particular trader here, but I can promise you that that's all BS. And I dare any single one of you traders that are inevitably going to watch this and be salty about it to challenge me on it, because I will take your lunch money and embarrass you in front of the school. I hope the rest of you have a great day. Peace.